I think if we had some really big shock, the way the Fed would have to react is we'd go down to zero, and then we'd have to make a decision about whether we want to use forward guidance or quantitative easing or some other policy. But those would be the most likely choices initially. But that would be in the case that we really got into a very large shock. I don't think we're in that situation right now. We have these downside risks. As you guys are pointing out, we have relatively good performance in household consumption and labor markets. So I think we're in good shape for now. We're taking on board the idea that we have the downside risk. We have reduced the policy rate. We've made major changes, actually, in monetary policy during 2019. And we could take this back once the clouds blow over here.
I think it's fair to say you've become the favorite central banker, at least in the U.S., of President Trump. I mean, you're more aligned with the administration.
You're my favorite TV personality as well. So.
I wasn't saying me. I was saying the president.
Hold on there.
But that's a great compliment. You are more aligned with the administration in terms of a 50 basis point cut. I mean, how does it make you feel that the president, which bashes the chairman on an almost daily basis on Twitter because of his policies, is more aligned with you? And you know, people out there are saying that you're campaigning for the job.
Yeah, those of you that know me know that I've got my own views on policy, and in every situation I will express what those views are because I see that as my role as president of the bank and member of the Open Market Committee. So I'm presenting what I think is the best piece of advice that I can provide in this circumstance, taking everything else as given that's going on in the U.S. economy and in the world.
Does Chair Powell know you're doing these sorts of interviews? Do you get his approval? Does he support the fact that you're coming out to call for more cuts than he wants?
You know, we're independent operators, and there's certainly these kinds of things get scheduled, as you guys know, quite a ways ahead of time. We get lots of requests. I would say, just generally speaking about this issue, after the financial crisis, the demand for communication from the Federal Reserve skyrocketed, and it really hasn't come down all that much since then. I think it's important for all committee members actually to get out and talk because the private sector has many more people that are talking about Fed policy. So I think it's important for the policymakers to get their side of the story out, and then private sector commenters or others, political commenters, can make their own comments on top of that. But I think it's up to us to drive the policy by talking regularly to media outlets like this one.
Final quickie on news of day. Do you think that the heating up of impeachment effort by the House of Representatives represents any kind of threat to the markets or to the economy in terms of uncertainty around policy and the election?
Yeah, I don't know. Viewing it from a distance, this just sounds like more investigation to me. So, you know, we're used to dealing with political uncertainty as kind of a backdrop to monetary policy making. This doesn't sound too different to me. So I expect that investors will just have to take on board that there'll be a certain amount of political uncertainty going forward until we get to the 2020 election.